Welcome everyone to the Lithium Supply and Battery Raw Materials Conference 2024.
Okay, welcome back to Rockstock Channel. It is Tuesday, June 25th, and we are having here live at the Fastmarkets, red rocks, right? There's a lot of red rocks on the RK Equity scoreboard, in terms of spodumene, performance. We have for the first time here Jeff Elliott, the non-executive chairman of Wildcat Resources, who I met for the first time just yesterday, but was very happy to hear as an avid listener to our channel, and was reciting back some of Rodney and my commentary here. So I'm looking at a stock chart, and literally a year ago, in June of 2023, your stock was like 13 cents, right? And now it's 32 cents, but you were a major, discovery story into like November of last year, peaking at like 91 cents. This is the first time you've been at this conference. We watched Wildcat from afar, one of many, typical exploration successes in Western Australia that the Aussies kind of like knew and found ahead of time. And but good, the stocks come in, quite a bit. So Jeff, just tell us a little bit about, yourself, Wildcat, and how you're finding the conference, and what your, the overall trajectory is from here. You did raise money. Just remind us what price and how much you raised.
Sure.
In your discussion, but this is just I'm not unprepared. I haven't done a lot of work here. We just met, and would love to just give our listeners an opportunity to hear the Wildcat story for the first time.
Yeah, well, look, thanks very much. It's as you say, unprepared and unexpected. I'm an avid listener and a fan. Since Wildcat acquired this Tabba Lithium project a year ago, I've been on a steep learning curve, and it's thanks to people like you and Rodney and other colleagues and so many in the industry that's been really welcoming, actually, and learning in this very new and burgeoning and fast-growing industry. So look, it's great to be here. So thanks very much. I'm a geologist background. Been in the industry for over 30 years. Worked in various parts of the world, both in exploration and mining environments, but also been an entrepreneur and started a few different businesses across mining services. Ran a large consultancy which had offices all around the world, sold that off, and then joined a public company, Wildcat. It was a junior. I think it was 2 cents when I joined about 3 or 4 years ago, with a gold project that we couldn't get to because of COVID. And so we came up with a strategy. We thought, hey, we're based in Perth, Western Australia. We'll target lithium in some places where we get to, and the Pilbara is a good place to start, as well as the goldfields where the other lithium projects are. We optioned a few pieces of ground and had a crack at them, but they didn't really turn out. And then about a year and a half ago, we identified the Tabba asset. It was the fourth of number 4 in a group of assets that all turned into significant lithium projects, and 3 of which are now lithium mines. So that's Greenbushes, Pilgangoora and Wodgina. They were all previously tantalum assets owned by Global Advanced Metals, which is in turn owned by RCF Investment Bank. We managed to strike a deal using equity and I guess highlighting our technical expertise and our operating expertise and some, I guess, hopefully some commercial skills as well. And so we managed to cut a deal where we did about a $6 million equity deal when our share price was around 3 cents. It took about 6 months to execute that deal, and then we announced it to the market in May 17 last year. Share price was around 3.5 cents. Part of that, we were a 20 million market cap, or sub 20 million market cap company, with share price highs and lows 2 to 4 cents. Prior to that, we had about 3 million cash in the bank and an 800,000 ounce gold deposit. As soon as we announced this Tabba acquisition, and people could see the similarities to Wodgina and Pilgangoora and others, we started on this rapid rise of this roller coaster of last year. So it's been crazy. We raised $7.5 million as part of that. As part of that deal, we had to have $10 million in the bank. We had to commit to a significant drill program. We immediately started drilling. We went to the field straight away. We were drilling within a month. Our first hole, we hit lithium-bearing pegmatites. We put on a second rig, a third rig, a fourth rig, a fifth rig, a sixth rig. So we've done 100,000 metres in the last 12 months. Half of that's diamond core. And we announced the significant discovery in September because we were hitting 85 metres at 1.5, 85 metres at 1.3. The scale from the initial holes, we were hitting 10 metres, suddenly moved to something that we're onto something much larger here. So it's been a wild ride.
It's amazing. When I think about it, when I first met you, I met your colleagues in November, and I looked just where you are on the map, next to Wajin and next to Pilgangoora and GAM, Global Advanced Minerals, they've been in this game for a long time. How is it in the prior lithium boom that they didn't option this to somebody else, a few years ago?
Yeah, look, they did sell off the other assets. They sold off Pilgangoora, Pilbara Minerals. Prior to the current management, were operating Tabba Tabba as a tantalum plant. So they had a small flotation plant there. In joint venture with a processing company under JV to Global Advanced Metals. The tantalum price, wasn't great at that time, and the founding directors, John Young and Neil Biddle, went on and picked up Pilgangoora. And so we like to, if we could emulate a part of that success, that would be wonderful. They just didn't explore, the pegmatites were mapped, but they were believed to be tantalum dominant systems. And the geochemical expression at surface is quite weak. And so we drilled in the area that had the best geochemical expression, and that's where we hit mineralisation, but it was the smallest, the thinnest mineralisation. The area that had a poorer geochemical expression, that's our layer deposit. A lot of our prospects deposit names are Star Wars names, which came about from Tabba Tabba's code name being Jabba the Hutt. And then from there, it kept on going, and so we had Han and the Hutt and Chewie and Leia and
you need C-3PO and R2-D2, given Elon Musk is saying everyone's going to want one of these robots.
Well, absolutely, and we're looking for them hard, but we were really fortunate. Our share price kept on escalating as we put out more and more good drill hits, and the scale of this project started to become known. One of the key things is we're only 80 kilometres from the Port headland, so we're between Pilgangoora to our south, another 47 kilometres south, and Wodgina about 87 kilometres further away to the southwest. But we've got infrastructure in place in terms of a haul road. We're on mining leases rather than exploration licence, so quite different to Azur's Andover project. Topography is flat. It's been disturbed by mining. It already had mining permitted for the tantalum deposit, so there's a lot of pluses which actually reduce our permitting pathway, and of course Western Australia is a very good place to operate. So we were fortunate that those things led to a share price appreciation, and we were able to raise $100 million. We started off with a target of maybe we should take 20 or 40, but the price kept on going up, and more people were offering us money.
What price was that at?
That was done at 76 cents. It was led by Euros Hartleys and Canaccord. Mm-hmm. During the process of when we bought the asset, RCF and who owned GAM end up controlling part of our stock. But in that price run up, they decided to sell, and so
they did very well. They basically took You said you paid $6 million in 3-cent Wildcat stock?
3.5 cent Wildcat stock, and sold it out for 85 cents to Minres about 4 months later for, I think, around $160 million.
It's a good IRR for them.
It was a good return for them. But RCF continued to be a supporter. They're still a holder through a royalty, and GAM with the tantalum royalty. So, as well as there's some performance rights there. If we were to find define a JORC resource of over 10 million tonnes, there's some other performance shares there, which will go to the vendors. We think we're easily going to hit that
Have
milestone.
you announced the resource yet?
No, we're not. We've been drilling away. We've done over 100,000 metres. We've still got quite a number of core samples to be processed, both in the field and that lab. We've got 4 rigs still turning now. We've done 250 kilos of cider test work, looking at both DMS float, flotation only. We're coming close to a point to getting the final reports, so we're hoping we could be in a position to release that information to the market in the next month. Our sort of rough timetable for a maiden resource will be in the first part of the fourth quarter of the calendar year, so maybe around October. But that the longer we leave it, the more holes and more assays we get into it. But,
right. Okay. So there's been a ton of drilling, but so far the story was all drilling success, and this year just the stocks come off with all other lithium stocks, and so GAM sold all to Mineral Resources, or Mineral Resources now has what, 19.9 in the company? Was it all in that transaction, or did they buy on market?
No, they bought on market as well. So they started accumulating on market before they went substantial on the ASX. You have to announce once you hit 5%. So they started accumulating, and then there was an off-market deal done between RCF, GAM, and MinRes. But MinRes have been look, they're a significant shareholder. Obviously, I've got good rapport with the MinRes team. Go and give them updates regularly. They've offered us support and so on. So look, at the moment, the more people we can learn from, we're new in this industry, it's our first conference. But yeah, the more people we can learn from, the Alturas and the Sayonas and the Pilbara Minerals and all these companies that have come before us are going to be, there's so many learnings that we don't want to reinvent the wheel.
Yeah. So what do you make of, so Chris Ellison and MinRes bought at a much higher price. Gina bought, Liontown, much higher price. Azor, I guess, went at a high price. But like from the sentiment at this conference is, and what reflected in the market is like pretty rainy, pessimistic. What's your sense from your interaction with, I guess, Chris Ellison? If you own your own rock, you're God. Australia is the most socially acceptable. So yeah, on the permitting side, I don't think there's like an issue there. But what's your sense? Actually, what's your sense of what you're experiencing here the first time at this conference, and what you generally experience, in Australia, and what you're hearing, I guess, from MinRes and team on the medium and long term?
Yeah, look, my number one feeling is I guess, gratitude. The number of people that have been friendly, really willing to sort of network, to help, point out, connect. It's just been lovely. It's I wanted to come to this conference last year. It wasn't the right timing because we were mid-deal and the deal hadn't closed. So I was sure to come this year. I'd like to come every other time and really sort of just the networking potential is just huge, and the industry is, I find, very helpful. Both on the service side, but even on the competitors, all the way vertically up the value chain. We're having some great meetings with end users, investors, funds, peers. It's really great. I guess, look, I'm an optimist. I started my life as an exploration geologist, so you have to be an optimist, but I guess I'm a realist as well. I think our timing, we're lucky not to be in construction now, or, we're well funded. This 100 million that we raised in October, we reported 90 million in the bank at the end of the last quarter. We've been very efficient with that capital. We've got a small sort of staff team and low corporate overhead costs, and we're pumping all that money into the ground. We're very focused. We've got 1,000 square kilometres of other exploration licenses around us. We're just starting to drill some of those in the next couple of months, which is quite close to a game between us and Pilgangoora at our Bolt Cutter East and our Pilgangoora North tenement. I guess, the timing-wise, forecasts, tend to be, I guess they tend to reflect the rear vision mirror more to me than what actually happens, right? Because few people get the forecasting right, and particularly in something that's so new and highly volatile as this industry. So look, our business plan is just to go forward. It'll be what it will be when we get closer to production. If we need to slow things down or push things out, we can, because we're well funded. We've got a very supportive shareholder base. All the board is highly invested, and as well as the people that got in early, they want to see us go into production. We think we've got that short time frame to get into production in somewhere around 2 years, which is amazing. And
that would be very fast. You're fully funded through maiden resource, PFS to DFS. You don't really need to raise capital before making a final investment decision. Is that right?
Yeah, 100%, Howard. Yeah, look, at the end of this, we're coming up in 5 days' time. The end of the financial year, we're still going to have most of that money that we raised. We've reduced from 6 rigs to 4 rigs, just mainly because we've drilled out a lot of the first sort of 10 years of the potential mine plan. Obviously, we don't have a resource at the moment, but we think there's no point in pushing too much capital into the deeper parts of the ore body, but it does continue down deep. And we're putting more money into de-risking now, and then start exploring our broader tenements. So yeah, fully funded for 2 years or more if we need it.
Okay, that's great. We're going to end it there, Jeff. This was we're doing just a series of 3 or 4 interviews with some interesting spodumene development, and producing stories. But look forward to having you, on the podcast for when we're a bit more prepared for an update, and certainly, before and maybe definitely at the time of your maiden resource in October. But thank you very much.
No problem. And thanks so much for the opportunity. I look forward to listening to more of your podcasts.
Okay, excellent. Thank you, Jeff. Appreciate it. Okay, next up we have Chris Evans, the CEO of Winsome Resources. We had you on the podcast just after you made this Renard acquisition, and I was very privileged to join 15 others last Friday to actually see it. I don't want to give too much away from that, but I did take some footage there of the plant. We've got to kind of collate that and edit that, and that'll come out in a little while. But I think we saw you at PDAC. You had, and then after our visit, our last conversation, I think you were heading to Asia. You met with a lot of Asian strategics. There's a lot of Asian strategics here. If you could just update us on what's happening, at Winsome. The stock, obviously, it hit like a 50 low, earlier in the year. It popped to 145, I think, on the Renard news, and now it's, everything's down a lot. But I haven't looked on a relative basis. But as I was saying before, we're at Red Rock, and there's a lot of red rock on the RK Equity scoreboard. But well capitalized companies. You also did a capital raise, so just give us an update, since we kind of last spoke to you, and I'll leave it with you.
Thank you, Howard. Pleasure to be here at the conference and to be interviewed. I think there's certainly been a lot happening in the last couple of months for us, despite the market conditions. I think that's a function, I was going to say luck, but perhaps compared to some of our peers, we're well capitalised, and that's allowed us to keep progressing with all our planned activities. So we've had a series of strategic conversations, as you alluded to. They started in earnest around PDAC this year, and that was on the back of our maiden resource being published at the very end of last year. That excited a lot more interest. So we had a first round of discussions then. About 6 weeks ago we went to Korea and Japan, met in person a lot of the potential strategic partners that we might be dealing with, and now again at this conference. The nature of the strategic partnerships we are looking for is a partner who can help us convert our product into lithium hydroxide within Quebec. And as you alluded to, again, there are a lot of those here today. So we're looking forward to the conversations, and sort of packed out 16 meetings today and similar tomorrow, which is very encouraging. The other things we've done in the last couple of months is upgraded our resource. So about 6 weeks ago we published resource upgrade, and that's put us now as the third largest lithium resource in North America, but importantly I think the largest indicated resource, the largest lithium indicated resource in North America. And with the Renard mine just 60 kilometres away in the ability to acquire that at some point this year, that gives us a credible pathway to production with a world-class resource just down the road. And then just last week we announced our capital raise. We wanted to be well-funded and remove any perception that we weren't well-funded enough to exercise the option to acquire Renard and therefore be perceived as come raise. So we did a raise of 25 million Australian dollars. We've now got circa 50 in the bank, and that allows us again for the next 12 months or so to continue with all the activities we want to while we finish our studies in early September, potentially exercise the option to acquire Renard and then look for a strategic partner.
Okay, and one thing that people, I think, may not fully understand is that like the flow-through funding is like very attractive terms, but it needs to be spent on exploration, and it needs to be spent within 12 months, right? So you don't have a choice to just hold on to a lot of that capital, correct?
Yes, the specifics are that it has to be spent by the end of the following calendar year. So the money, the flow through we just raised now has to be spent by the end of next year. So we've effectively got 18 months to spend that. But that's right, we've still got
the money raised last year,
that's got to be spent by the end of this year.
Your spend might have been higher than if you, just in the market environment we're in, if people are holding back on spending, your level of spending, you had to drill from last year's capital raise.
That's exactly right. And we raised about 30 million in October last year, all flow through. So we had it in our cash flow projections that we would be spending all of that by the end of this year. Maybe the amount was spent has surprised some in the market, but it was always part of our plans.
Okay, and the Renard mine, you said you were going to come out with 2 scoping studies.
That's right. Well, scoping studies and PEA, they'll be both in JORC and NI 43-101 format. The reason there's 2, one is a greenfield project just on Adina, as if we were building a new plant, no Renard diamond mine. And then the other study will be a brownfield project, repurposing the Renard mine to process our lithium. And those will compare the economics and the technical merits of those 2 projects, or 2 studies, and after that make the decision as to whether we acquire the Renard mine. But there's nothing yet that we see that would say we wouldn't acquire that.
Okay, we visited it. I mean, this was built, not that long ago, so a lot of, all of the equipment is very new, and I'm not an expert on all the flow sheets, but I understood a large part of the front end, is similar. Some on the back end you would need to, purchase, but we'll know in your scoping study and PEA what the estimates are. But the overall idea of this is that you will save a meaningful amount, in the hundreds of millions of dollars in capex, and also because it was an already permitted mine, it should accelerate your permitting plan.
Yeah, yes, that's exactly right. We expect to save significant capex, hundreds of millions of dollars. We've got to be careful about accelerating the plans. We try not to use that word. It's more about reducing the risk associated with our approvals.
Okay.
Because the majority of the infrastructure is already there, we effectively don't have to have that permitted. The permitting we do have to do, it's got a much smaller disturbance area. There's less approvals associated with it, and therefore the risk is less.
Mm-hmm. And you've emphasized that you're going to convert this in Quebec. So there's no option in your mind to sell spodumene either to China or maybe to Tesla at Corpus Christi?
That's certainly not our first intent. We're signalling very clearly to the Quebec government, and not only for social acceptability reasons, but just for logistical reasons, that we would like to have our product converted in Quebec. There's a gap in the supply chain as far as we can see. The Quebec government's done a fantastic job of attracting strategics, end users, GM, Ford, EcoPro and POSCO, BASF, Northvolt, all into Quebec. They're producing PCAM and CAM materials, but they need lithium from Quebec. So there's a gap in the supply chain that we think we can slot into.
Okay. While I was on the visit there, what came to mind, we had some involvement in Kidman, and and then the news of SQM coming into Sweden, small investment, but they came into Kidman, and then Wesfarmers took over Kidman, and so that's two large companies, building integrated, mine and conversion. So I just started thinking, could SQM kind of come into Quebec if they're going to Sweden, not just playing around in Western Australia, and then who out there might be a Wesfarmers, an American or a Canadian industrial company that has the long-term vision, diversified conglomerate to partner, and this wasn't specific to Winsome, but it could be Winsome, it could be Patriot, it could be, and right now you have North American Lithium, trying to get to nameplate capacity, lower their cost. They're selling to China and eventually soon to Tesla, but it's still going to be a while before there's conversion. Arcadium, they're building an integrated, but so there's 11 or 12 aluminum smelters in Quebec, and I envision there to be 10 or 11 hydroxide and carbonate conversion facilities, but it's a lot of capital. I mean, those aluminum refineries started in World War II, and I don't know how many years it took to build that, but it's not necessarily for you to comment. There's just an observation that what really catalyzed the vertically integrated hydroxide from spodumene in Western Australia was this SQM Wesfarmers, and might we see that? Do you have any sense, from the conversations you're having? I know you want to partner, on the downstream, but what's your sense of their view of Quebec and this comparable model to what you see in Western Australia?
I wouldn't say I've seen any chemical companies jump to mind or industrial companies like that, but it's no secret that the likes of Rio Tinto have been looking around Quebec. Of course, they're the owners of several of those aluminum smelters. So they could be that third party, someone like them. Maybe a slightly different context than what happened in Western Australia, but they could be the ones who put the deal together or complete that tripartite agreement that may be very synergistic to get projects like ours into production in Quebec.
Maybe some of the other players that are going downstream into cathode and battery manufacturing in the region. There's POSCO, there's EcoPro, there's a BASF.
Northvolt.
Northvolt, so maybe some of those players. I was interested to be, there's lots of people here I've met around, but I hadn't seen Fortescue in a while. I saw them a few years ago here.
Yes,
I saw them here, but they could be, doesn't necessarily have to be a American or Canadian industrial company. It could be another big Australian company. Why wouldn't Gina Reinhardt come here potentially? I mean, there's opportunity, but anyway, it's a function of the market is the market, and we'll see how that goes. Could you just comment lastly on Power Metals is a investment you made, and I've had an opportunity to meet Hayden Daxter here. Any update on that investment and the cesium opportunity? They've put out some interesting drill results on the cesium side. Yeah,
it's very encouraging. We originally acquired our 20% equity stake and all the offtake rights for the Case Lake project based on the lithium, but the cesium's become more interesting over the past 12 months. As far as I'm aware, there are currently, as of today, no operating cesium mines in the world. The two that were most recently operating were Bakita and Tanco in Manitoba, both owned by Sayona Mining. So cesium being a critical mineral both in the US and Canada is a hot topic. And we have all the offtake rights, and so we're having some interesting thoughts about what we can do with those without distracting ourselves from our main game, which is developing Adina and Renard. That's becoming a potentially strategically important, perhaps financially beneficial investment that we made.
Yeah, I don't think anybody who looks at your valuation puts any valuation, I guess, on your 20% ownership in Power Metals.
They don't, no. The equity value there is 12 million or something like that, and then who knows what the offtake's worth.
Right. Okay. Well, to be continued on that, this was just a quick kind of catch-up. We're going to have more, as I said, because I did visit. I need to kind of consolidate my thoughts and some of that footage, but really appreciate your taking the time out of your busy schedule here at Fastmarkets to have this update with us, Chris.
Thank you, Howard, and thanks for coming to site last week.
My pleasure. Thanks for inviting me.
James, good to see you in the flesh again. How is it going at the conference?
Pretty good, Rodney. Early days, but it's good to see. I think a lot of people expecting different moods given market changes, but everyone's upbeat, and I think it augurs pretty well that people are still there, and the long-term future looks pretty good.
As I said on the panel, when I have to put a tie on, then you know we're deep in the bear market territory. So, James, if we can just talk a little about North American lithium. There's been a lot going on there. Certainly, it looks like you've had a good run of it in fair weather in ramping up the project.
Sure, yeah, Rodney, it'll be good. I think particularly when we come up to our quarterly results, and we want to give a holistic view of what we've done in production cost-wise. And moving through the ramp-up, obviously you've been monitoring a lot of them previously, and I've been involved in a few, and this has been, all of them are challenging, but we've had different challenges across the board, and I think we're through most of those now, and the resolutions have been good. The team on site, led by Sylvain Collard and his team, have been probably the best I've seen in regards to problem solving and putting the energy where it needs to be. And you know, I think people look at the results in January, and we talk to people, and they see 11 or 12,000 tonnes, and they ask us where we need to be, and we'll say, look, 18 or 19,000 tonnes per month. And it's the way we get to that number, and we ratchet the project up, and we pressure test all of our systems, and we're at that point now. So couldn't be happier, to be honest.
So you are at that number?
We'll have it out of the quarterlies, but the ramp up is in a trajectory that takes us to that number, yeah. So.
And just some of the challenges that you were facing that you've overcome?
Yeah, I think probably it's been quite open with the ramp up and the challenge we've had to keep our investors and stakeholders abreast of what we are doing. And it is a restart of an operation, so we're dealing with a lot of infrastructure that's in place, and we've had to work around that. And that gives us limitations in regards to redundancy of the flow sheet and the process. And particularly when you look at utilisation rates and availability rates, we've split the plant in half for assessment purposes. So everything post the crushing and grinding circuits are really our process circuits, and they've outperformed from very early in the piece, and that's been pleasing, because that's generally one of the difficult parts to get right, like our reagent uses, our frothing, our recovery, our limbs and WIMs, and everything we do to reduce our deleterious elements in the cargoes have worked really well. I've been quite pleased with those. What we have is a lot of intensity, and the capital's gone into the front end of the crushing and grinding circuits, and we're operating NAL at levels that hasn't operated before. So we're targeting throughput of 175 tonnes per hour, and that takes us to where we need to be. So we've installed the crushed ore dome now, which is in use, which came online in early May. And we've got the process refeed system, which gives us the redundancy around any primary crusher issues. Our ore sorters are working reasonably well. We're doing a pre-sort on the ROM pad to make sure the philosophy is quite simple. We don't want any material into the plant to try and then take it out. We just don't have it going in the first place. So we've changed the way we operate in the mine. We've had some challenging mining conditions because we are working in some old underground stopes, so we're backfilling and mining through those. So it hasn't been an easy one, but I think once we move through those processes, then I think it gives us a really good shot to improving on what we expect.
And James, in terms of envisaged grade and what you're achieving on the material?
Consistently, we've reported it's in line with our reports, so around 5.4, 5.5 lithium oxide percentage. Iron, we were a medium grade product, about 1.5% Fe2O3. Mica's not an issue. Moisture running at about 6 to 7% for an all fines product, so it's pretty good, and it's consistent across the board.
And is there sort of benefits on the cost side per tonne as you ramp?
Yeah, look, obviously the lowest hanging fruit is to get more tonnes and divide our fixed costs by more tonnes, and that's what we want to deliver this quarter. From the other perspective, we've had, when we purchased NAL in 2021, we've gone through an approvals process which has required us to re-permit, look at the water management plan, have a bit of equilibrium in the way the pit looks. We've had new discoveries, if you've seen, we've released quite recently. So the mine plan's changed. We've had to have additional costs to establish the mine, We've had a bit of overhaul because we've got to utilise a waste facility which is further away. All that starts to peel back as we move through the cycle and we get back into the heart of where we are. So, essentially the recoveries, we've reported at the end of the first quarter we're above design. So we've maintained that momentum and recovery, which is always difficult. It's just managing now, reducing our operational costs by further tonnes and a few more efficiencies.
And then if we move on to exploration, you've had some great intercepts that look better than the original pit.
Yeah, and I think and it's a good point, Ronnie, because we've invested in both North American Lithium and our other Tier 1 project in Moblan, and exploring both of those. And this was exploration drilling, not so much mine extension drilling. But I know when Silva and I were up there in probably May 2023, I think, probably looking at where we could move and what the potential was at NAL, and we've tested areas that hadn't been tested before. And I think it's the simplistic way to probably appreciate what we had. We had a data set that hadn't had a lot of revisions since earlier the last decade due to restraints and the markets we operated in. So we've had one intersection which is 60 metres at 1.6% true thickness. Don't get me wrong on the numbers, but we reported one I think a week ago, and it was about another 55 metres at 1.5%. So these are globally significant intercepts, and it's really opening up the optionality, I think, as we think of the future for North American Lithium.
Okay, that's great. And just lastly, what are you hoping to take away from the conference the rest of your time here?
Well, I think one of the things that it offers, it gives us an opportunity to interact with our peers, and that's been important. A lot of us have been in this industry for a long time, and a lot of us are in different roles than we were a long time ago. And it gives us an opportunity where everyone's in the same vicinity that would normally take a lot of time to get to that. I think that the way the conference has evolved a little bit more from a resources showcasing perspective to more a lot of the service providers and innovation perspective. So there's a lot of ability to interact with both types of groups. And then to top that off, you've got a significant investor base here. So a lot of the fund managers are here. A lot of the banking institutions are here, and people we've known over the years and funding these projects. And it's a great opportunity to in a location that facilitates itself, easy to get to, good size. And I mean, we could probably do without the 44-degree heat, but in the end, it just gives us that opportunity to interact quite simply and regularly.
Great. Thanks very much for joining.
Thanks, Rodney. Thanks for having me.
Neil, great to see you again in the flesh. You're looking relaxed. How's the conference going so far for you?
It's an exciting conference. It's always good to be here.
So you are at that position that you will be able to potentially build and construct and be in the down cycle and be ready for the next up cycle.
I would agree with that. So if you're looking at the project, and I've always said this, it's a really straightforward project, and that feeds through into costs. So both in terms of the CapEx and the OpEx. So you have a very straightforward project, which then means that if you have a straightforward project, you have these low costs, you can actually survive any downward end of the cycle if you're a bottom cost quartile company, which we certainly are. We also have the advantage actually of not being in production today, which actually is quite a good thing. But with a timeline to production of 2 years and looking out there at potential new supply, so there has been a fair amount of new supply this year. But as you're looking out to 2026, and with the demand for lithium growing at double digits every year, very well placed, I think, for the future. On the other side to it is, we've been a very well-funded company. We've had big supporters, big shareholders. People can see the value of the project. One of the things that we've been working very intensely on recently is completing the offtake process, and we're very pleased how that's going. So watch this space. The news will be out on that in the next few weeks, I hope. So I think that's very positive in itself. And in terms of the permitting, we're coming to the end of the permitting cycle, so we can break ground on the project. So we hope to complete that in the next month or two. So looking very good, I think.
Just as a refresher, what is the sort of number outstanding that Atlantic needs to provide for its share of the CapEx, give or take?
So it's around, let's say, the 40 million mark. And if you look at it, so obviously we have very important investors in terms of the Sovereign Wealth Fund. They're coming in parallel to completing the parliamentary ratification. A couple of weeks behind in that because the parliamentary schedule is a bit backed up in Ghana, but fully expect that to happen next month. So we'll complete that investment, which is around $28 million initially, and then about $11 million of ongoing financing. We obviously have a very significant agreement with Piedmont to provide funding. And finally, the last piece is the offtake funding, which we referred to a moment ago. And we went out there to look for 75 to 100 million of prepayment financing with plus some equity. So we don't intend to ever draw down fully on that, but it's good to have that capacity as you go forward into the construction phase.
Yeah, that's a great point. It is something, working capital requirements and so on, they always pop up, don't they?
They do indeed. And you need flexibility. I mean, I'm very impressed with the way those discussions on offtake have gone. And while I know people are a lot concerned about the lithium price in the market, if you look out a couple of years, which the companies we're talking to are the chemical converters who actually need product to feed into their processes, you can see that they are very busy securing that supply because they need to have that supply. You don't want to have a chemical plant and not be able to run it every day.
And you made an important point slightly earlier in the chat is, given your likely OPEX costs, you can survive pretty much anything that comes our way.
So, I mean, if you're looking out there at the universe of companies today, yes, absolutely. I mean, if you look at the costs that we have, an awful lot of other lithium companies will be closing their doors before we'll ever have to close ours.
So the idea then is, one of the things I wanted to ask, I know it's not a priority, but you listed on the exchange in Ghana now. How's that going?
We did. So this is actually our third listing. This was a very important part of what we're doing locally as part of the content for Ghana. It was a requirement on us on the mining lease that was issued at the end of November last year. So the Ghana government is very keen to see the development of that market. We were met very enthusiastically by Ghanaian investors. Trading is quite slight at this point in time. We have had some trading activity in the stock, but I think the real opportunity there is as we go to production, because there are a lot of pension funds who can't invest in pre-production stories, but can actually invest into production stories. So I do expect that to grow over time. So there are a lot of pension funds in Ghana actually who are focused on the sector and looking for new opportunities to invest. So they were very excited to see what we were doing with a lithium company, which is new for Ghana.
That's true, because traditionally it's been more gold, I think, or...
Overwhelmingly, it's gold. I mean, obviously over 100 years of gold mining in Ghana, and we've benefited from that in terms of, the company has great infrastructure for mining, port facilities, but also in terms of human capital. The experienced and educated staff that we have available to us in country means we don't actually have to bring expats in, which is actually a big advantage to us. But yes, I mean, it's for Ghana, it's a very important thing that we listed. We understood that, and we look to have that as a growing market as we move towards production.
Okay, great. And just as a last thing, what is it you're hoping to take away from the conference?
Today, I think these events are always about networking, and you're out there talking to. So obviously, I think substantially we've got to the point we'll be able to conclude our offtake arrangements, but we also have more product that's available. So it's always good to speak to people who are in the business of acquiring more offtake. So those are ultimately our customers and ultimately our partners as well in the future. So it's always good to be out there and meeting your partners. We're here also with Piedmont as well. People are here. It's nice to sit down and talk about the project and how we're progressing. So it's mainly about the people contacts more than anything else here.
And maybe one last one is you've mentioned that the offtake news will be out in the next while. Is there anything else?
Yes, it's actually... It's the thing with news flow. It's kind of you go through a desert of no news flow at all. We were hoping by the end of this month that the parliamentary ratification of the mining lease that was done last year would happen this month. But unfortunately, the Ghana Parliament's been rather backed up recently. So do expect it to happen that in the month of July. We've also advanced on the EPA. So our last public consultation is this week. And so we're looking to complete the EPA as well in the next 2 months, so that'll happen. Obviously, as I mentioned earlier, the second tier investment by the Sovereign Wealth Fund, so that's 28 billion. That should happen in parallel with with the ratification by Parliament. Completion of the offtake process. We should also have a small increment in terms of the mineral resource, so we continually add to that as the months go by. So we should also be getting that out in the next few months as well. So yes, as I say, after a couple of months of being quite quiet on news flow, July is probably going to be our busiest month in years. And we're looking at breaking ground on the project later this year. So there's an awful lot happening now.
That's great. Look forward to catching up with you when those come out.
I look forward to that too.
Great.
Okay, and now we have again at Red Rocks. I'm talking about this red spodumene rocks. The RK Equity scoreboard is filled with blood red. Under a blood red sky, there is Red Rocks is also a concert venue. But anyway, so Keith, welcome back. It was good to see you for an unplanned, an impromptu conversation. But we did have we interviewed Neil Herbert at Atlantic, and we interviewed James Brown at Sayona, two of your warm joint venture partners, and they gave updates to Rodney, which I didn't fully hear, so I don't know exactly what they said, but your stock is under $10, which I'm shocked. I remember I participated just before Battery Day 4 years ago in a placement, I don't know, a couple of months before that, it was like at $6.30.
I remember it well, yeah.
The stock went, it was your first U.S. Raise, and after that, the liquidity migrated from Australia to the U.S. You benefited from that with capital raises at high levels at certain times, and that enabled, post-Battery Day Tesla, you to make very astute investments in Sayona and helping get North American Lithium as well as in Atlantic, and here we are. You're in production, and you have a still an offtake with Tesla, but from Sayona. So just like we've been coming to these, I know you a long time, Keith. I remember we went to Quebec in 2018, and I was trying to encourage you to kind of take the job.
2017. This conference in June 2017,
and you were doing due diligence about lithium, and I was trying hard. It took 4 months to encourage you to take this job. So why don't you just, reminisce about the journey, but also give us an update on, you've had ups, downs, and now we're downs again. How do we...
I used to feel like a rookie in the lithium industry. So my 7th anniversary is coming soon, and I came into a bull market, experienced a difficult down market, had a tremendous bull market. Now we're well into, I think, another difficult bear market. So it's been interesting for sure for 7 years, ups and downs. It's interesting, you bring up the financing we did in June, I think it was, of 2020, at $6.30. Our stock hasn't been in single digits really since about that time. That was coming out of COVID. And since that time, we've added the interest in North American Lithium in Quebec. We've added the interest in Ewoyaa in Ghana with the partners you mentioned. Both great projects, great assets, really advancing really well. One is the only producer of spodumene in North America. It's the biggest lithium operation of any kind in North America. It's ramping really well. We think it has massive strategic value. Ghana, the Ewoyaa project, we think is the best located project in all of Africa. Really straightforward DMS project. The guys at Atlantic Lithium are doing a nice job advancing that. So these are two huge additions to our portfolio that are worth, we think each of them is worth a multiple of our market cap. And then, of course, we have Carolina Lithium, which is how we got started. You're called Piedmont Lithium because we're in the Piedmont region of North Carolina. We have one of two significant spodumene projects in the United States. Spodumene may not be rare globally, but it is in the U.S., and Albemarle has a project down the road, the Kings Mountain project. These are really exciting projects. I think the two best located lithium projects on the planet, 25 miles west of Charlotte. Hugely strategic to car companies and battery companies that we know. They'll both take time to develop and capital to develop, but both will be really important to the U.S. Kind of whole electrification theme. So we feel great about everything except the current lithium price kind of environment and malaise, and obviously the equity market is just really negative. I was in Australia 2 or 3 weeks ago. I've been marketing quite aggressively. I don't know anybody who's buying lithium stocks. All I know is people that are selling lithium stocks. So it's a difficult market. But every time we've been approaching a peak, people thought it would go on for a very long time. When we've been approaching troughs, like today, people feel like we're at troughs. People sort of can't see the light at the end of the tunnel. And I'm kind of comforted with the idea that in the ups and downs I've described, they've all come as a surprise to most people, a big surprise. I think the same thing's going to happen here. I don't think it's happening tomorrow or next week, but I think it's going to happen sooner than a lot of people think. And electrification, we're just beginning electrification. And everyone's going to drive an EV in 2040. I've said that before. I still feel that way. That's a huge market, but there are all kinds of other applications that are interesting. So we feel really bullish. And medium term, obviously it's a tough environment now, and we're just keeping our heads down and working hard to kind of get through this.
When we last interviewed you, you said everyone needs to raise capital. You did your capital raise by selling your Sayona and Atlantic stakes. Prices come down a bit. Where are you with shipments, cash flow, profitability of that? How much cash do you have, I guess, now, and what does the outlook look like? Because you do have a financing need at some point, with Atlantic that you need to make. So if you could just talk about your cash position, just like this whole balancing. Lithium prices recover, everything's all fine, but who knows when that recovers, and you still have to manage. You're a producer now. You have all the expenses associated with that.
There's two sorts of cash flow. There's operating cash flow, which is for most people outflow, and then there's project spending. So project spending in Ghana is low right now. Project spending in Carolina is very low right now. There's not a lot to do. We're advancing permitting in Ghana. We're advancing, some engineering work, but it's not a lot of money. Our intention with Ghana is to fund that development with third-party capital using our offtake entitlement, which is 50% of the production, to fund all of our share of the capital. That's our hope. We've launched a process quite recently to do that. We're in conversation with a number of parties, and we're optimistic that'll come together. There's a lot of interest. There aren't a lot of places you can get 175 or 80,000 tons of high-quality spodumene for a long period of time. That's something we can offer. And the project is an exceptional ore body. It's a mile from the ocean, as you know, the Atlantic Ocean. It's 70 miles from a wonderful port. So people find it very attractive. So I'm not worried about funding that. I think we're going to fund that with other people's money, essentially. Carolina is a big capital project, but it's 2-3 years away. I gather Eric Norris had some comments today about his Kings Mountain project being moving more slowly, and their South Carolina lithium hydroxide plant is going to move more slowly. The same is going to be true for us. But we're going to build it. We're going to advance it. We're focused now on spending time putting the capital, the stack together between loans from hopefully the Department of Energy and equity from partners. So that'll take time. And then NAL, the good news about NAL is it's built, the capital's spent. There's obviously sustaining capital, but this is a large spodumene operation that's up and running really well. Probably been $600 or $700 million of capital invested in that project over the years, including a couple hundred by Sayona and us in the last 2 or 3 years. So the capital spent. I can tell you the last shipment we arranged a few weeks ago is on a fixed price basis. That'll be cash flow positive.
That's good.
Now prices have fallen since then, so I think we're probably closer to break even, but that's okay. We're confident we'll one day make an awful lot of money on those shipments. Obviously, when I say those shipments are ours that we buy under our offtake agreement with Sayona, so we're paying market price for the material subject to a floor and a ceiling, and then reselling that material. And the ceiling's $900, so all things being equal, if the spodumene price is above $900, we make money on those shipments. And then between $900 and $500, we kind of break even with the market.
When we last spoke, I think there were, I forget how many tons you've guided the market that you were going to be selling this year?
Well, our annual entitlement is 113,000 tons. We had a shipment that was delayed in December, around 13,000 tons. So we'll have 126,000 tons this year.
Okay.
I think we shipped 15 in Q1, so it's going to be very much back-end loaded. And our two customers are Tesla and LG Chem, our two long-term customers. So, the second half of the year is when they should begin to take tonnage and scale. Otherwise, we've been selling into the spot market, which is the most challenging places to sell. The spot market is, A, it's volatile, but B, it's in a difficult market, it's just the most difficult place to sell because you're here with the shipment you need to ship, and the buyers can kind of take advantage of you. With the longer term agreements we have with our customers, the pricing is more balanced, I think, through the cycle, and it kind of works better.
So in the second half of this year, so you just announced, you just said you did another shipment, but the cadence of the shipments are going to increase over the course of the next number of months. Spodumene price has been dipping down. Who knows what will happen, a month from now, 4 months from now. But if you said you were cash flow positive on the last shipment, if prices stay at that level, and they say they should be less volatile because they're LG and Tesla tons, is that fair? That they'll, or maybe not all of them?
Yeah, most of the tons in the second half will be LG and Tesla tons.
Okay.
And they'll be, those are two contracts with different, they're both driven by Fastmarkets pricing.
Mm-hmm.
One of them is based on Fastmarkets hydroxide price. One's based on the Fastmarkets spodumene concentrate price. They're both based on lags, different lags that were negotiated, and they'll both be fine. Those will be our two most profitable customers relative to shipping into the spot market through the trading companies.
Okay.
But who knows where prices will be 3 weeks from now, frankly. It's very hard to project. But I think, we would hope to be cash flow positive on those shipments. Time will tell.
So if you are cash flow positive on those shipments this year, you have other cash, you still have some stake, I think, in Atlantic, and you're going to fund, you don't have a lot of CapEx in all of the other activities you mentioned, and you're going to fund Ewoyaa with other people's money. So Atlantic's process, I think, was relatively buoyant. Again, Rodney interviewed them. I didn't hear, but in my conversations with them, there was a lot of interest. But there was China interest and non-China interest. And what's your? I guess you just said you started a process, but you've been talking to strategics about Carolina and other places for a long time. How do you assess the dynamic for the Ghana process?
Yeah, listen, we're just getting started. We know the Atlantic folks well. We're aware of their process. We're not aware of any details, but other than I gather it's gone well and it's nearing the finish line, which is great. So we're thrilled for them, and there'll be a list of parties that didn't win that process who may be interested in what we're doing. The two of us, I think, are approaching it with somewhat different objectives in terms of how much spodumene we may be willing to commit. So we'll see. But I think interest is high. We had a meeting this morning with a big, Asian group who we were talking to them about Carolina, and they expressed great interest in Ewoyaa, which was a surprise in offtake. So it was a group that wasn't really on our top tier list. So I think there's interest broadly. There aren't, good news, bad news. We're in a very difficult market environment. One of the side effects of that will be a lot of projects will move more slowly. Just about every big project will move more slowly. Something like Ewoyaa might avoid that because it's a DMS plant, pretty simple, pretty low capex, so it can get built in a difficult cycle where others can't. What that means is if you're a big consumer and you're still trying to procure material for the late 2020s and into the 2030s, the fact that Ewoyaa is advancing makes it that much more interesting when other projects when I say other projects are going to move more slowly, these aren't announcements you've read yet, but I'm just telling you, it's going to happen.
Mm-hmm. It's inevitable.
There aren't any projects that are going to move faster, and there's a lot of projects that are going to move slow. Some are going to move a lot more slowly, and that'll eventually lead to the next, screaming bull market, in my view.
But what's important in Ewoyaa, and I've heard this in speaking to Atlantic, is that everyone talks about all this African supply, but a lot of that was just DSO, artisanal. There aren't a lot of projects that actually went through mineral resource estimation, PFS, DFS, that are industrial scale. They are, I think, the last cab off the rank within Africa.
Yeah.
And you mentioned DMS. We just interviewed Anna Cabral-Gardner of Sigma, and that's been very profitable, low cost, low transportation.
They've done great.
They've done great. I mean, I think that project is a right comparable to it, and it's very low capex. I mean, hers was crazy low capex. I mean, and Eric Norris, you mentioned, he did say all the margins still in the spodumene, right? There's no margin in conversion at present, right? And that makes having a localized, U.S. or North American supply chain difficult. But your capex need, I think theirs is much lower than yours. You still need to earn into the joint venture. So what's the quantum of capital?
If you use DMS CapEx, I think it's around 115 million for us. We think CapEx will grow. There's some engineering work that's been done that's indicated some opportunities to improve the project at a slightly higher capital cost. So we'll see. But in the DFS numbers are 115 million. But total CapEx is going to be certainly, I think, under 250, which compared to projects in Quebec of a similar production scale is dramatically lower.
Right.
And it's good. So it's a project that can get built. It's a great project. It should be relatively simple to ramp up, just like Sigma's was, and that's important as well, because you got to fund the business, then you got to fund the ramp up. And at NAL, they're doing great, but it's a flotation project. We're now 15, 16 months into it, and the ramp up was harder, more involved than a DMS project. Once it's running, it's great. Recoveries are great, but it's more of an investment. So it's interesting.
And in terms of partnering and funding, there are examples out there. I think Atlas has attracted some Chinese investors. Frontier attracted Japanese investors. Ganfeng bought a share. Pastos Grandes. And all of these have been done at premiums to the public market valuation. And I guess Atlantic had a smaller need, so they're offering of tonnage. You said you might be willing to offer maybe longer. They're just benchmarks out there for quantum of capital for amount of product that you can sell. So. Yeah, in my mind, there should be no problem for you to be able to fund all of that with a partner. But do you have any preference, or prepay, or a loan, or any other?
We'll see. I think of prepays and loans as very similar. You're creating a liability. You have to deliver material. If you don't, you have to pay the money back somehow. So, that's the structure we'll be looking at. We want to do something non-dilutive. So we're not looking to sell our interest. We're not looking to sell part of our interest. We're looking to advance that project. We think it's a great ore body, a great project, and a great underpinning for our business longer term. So we're looking for essentially debt funding, and the best source of debt funding for a project like that is debt associated with offtake. So somebody lending you money on some basis, and we're hopeful. And we're hopeful we'll get all the money that we need that way.
Okay, well, look, Ghana's a very mature jurisdiction for gold. It is the top 3 in the Fraser Institute in Africa, as we always say. So there's another...
No, it's a big mining country. Manganese, bauxite. We were on the road from the mine site to Takoradi Port, 70 miles, and there's a lot of activity there. So it's very proven. We like it there a lot. We're very comfortable there.
Okay, so relative to other companies who may be more cash-strapped sooner, there doesn't seem to be any real cash concern. In my observation, again, I don't know. Again, we don't know where lithium price goes, and and whether or not your tons will be profitable. And if they're not profitable, are you burning cash, I guess, on the North American lithium operations? It
all depends on the price. And we certainly had shipments in February, March where they were cash negative, but not big dollars. And then there's the JV itself, and maybe it needs cash injections here and there. But fundamentally, we feel good about it. We're in a strong position now. We last announced a cash position in February, I guess it was in May, 71 million at the end of March. And with the contract work we've been doing, our cash right now is strong. We expect to announce a strong number at the end of June.
Okay.
And we keep looking at, you mentioned non-core assets. We do own some stock in Atlantic Lithium. We have a couple other things we may look to monetize that are just not as important to us as they were before.
Right.
But we feel in pretty good shape.
Okay. Well, thank you very much for the update, Keith. As always,
thanks,
it's a pleasure to talk to you and reminisce a little bit about 7-year anniversary
coming
at
up.
This conference. Okay.
Thanks.
Okay, next up, I thought this was going to be all rocks and spodumene, but I saw JP over here, and I said, JP, we got some extra time. I thought we only had an hour. Why don't you kind of come on? We cover more, hard rock, but not exclusively on Rockstock channel, and we've been following and supportive of your story. Not a shareholder, but like many stocks, your stock has been going down. You've had to do some equity raise. If you could just kind of update our viewers who've never seen you on our channel, but I'm sure there's a lot of people who follow you that would love to hear what's going on.
Yeah, well, thanks for the invite. This is a very good conference, by the way. It's been well attended, and I'm really pleased to be here. And it's been good to reconnect to everyone. And we've been quite actively busy with here with Daniel. We're generating quite a bit of interest because the next thing for us that the market sort of doesn't really realize is that we have a lithium chloride concentrate strategy. We have given thumbs up by the government of Catamarca, so we can, in other words, export our product, and we can sell that within Argentina as well. And this is a whole new ballpark for us. It means that we can place our chloride anywhere around the world. There are strong, suitable interest. We've been to China also with Daniel, and from that trip, there's been advancing conversations that are looking really interesting in terms of the payability. It reinforces the study also that we did in terms of payability that we can get for lithium chloride concentrate, that in our study was 70%. And
I'm sorry, 70% payability for lithium chloride?
That's the study. So we
versus a lithium carbonate?
Carbonate pricing, yeah.
Battery grade or technical grade?
Battery grade.
That's a very high payability.
Absolutely. And so that was what we did in the study. So we're yet to come with the number on a contract and when we disclose this, but what we're seeing is that the interest in China is quite strong. Today, China is the only place other than Chile that can convert lithium, and Argentina as well, that can convert lithium chloride into lithium carbonate. But importantly, there are companies in China that can take our lithium chloride, polish it, and use it directly into LFP batteries. So that is sort of one of the main things that we're seeing as why the LFP batteries has a strong interest and commanding in China, and our product comes with a lot less steps going forward, and therefore a higher payability and potentially higher than the one that we had at our study. Now you brought the point that our share price has been depressed, and we're all aware where the lithium market is. The rhetoric that we hear in the West that the uptake is not quite there, and we see all the contrary happening in China. Yes, there could be a slowdown during this year, and the pricing has been reflecting some of that. But I would like to highlight that the current pricing for us is not about pricing. So our operating costs are approximately $3,500 a ton for production of lithium chloride. Our payability, as I mentioned, is around 70+% of the lithium carbonate equivalents. So the margins are there, they're very healthy, and therefore we believe that we got a solution going forward for Galan to become a producer and have healthy margins. Even if you extrapolate 12 months' time where everyone is going to be potentially under the same sort of strain of pricing, that I don't believe it's going to be the case though. But if it is, as a lithium brine producer, we have a low operating cost and we can be profitable. We have a business case that we can demonstrate that we can live and survive and thrive in this sort of environment. So short-term pain, yes, we're not necessarily where we want to be, but we've been dragged by the market volatility, the view of low lithium pricing in the environment. If you're a hard rock producer, definitely it's something that you don't want to be in. But don't forget the brine producers, that everyone that's in the brine business is making money. Look at all of them. Look at our neighbors. Look at Albemarle. Look at SQM. They make healthy margins in the current environment.
Brines are definitely low cost, but you're basically saying you're going to sell potentially directly to China. What about the Glencore relationship?
Well, that it's something that it's all what I can say is all options are on the table.
So this trip to China, this is like an alternative. Glencore has been quite slow, or you've been quite slow to finalize an agreement, like since you announced the MOU. But like you see, there's lots of Chinese groups, Atlas and others, are actively securing spodumene and providing capital for that offtake for a certain quantum of product for a certain duration of time. Mm-hmm. Is that what you think you're contemplating with some Chinese partner?
Well, China is quite active and very rapidly moving in terms of finding a solution for our product. And remember, we have phase 1 and 2. Phase 2 is coming up in terms of permits. So the Galan solution is not only just a small piece of that we're just looking at today. We have a growth plan, and there are many solutions for our product to be placed. So this is the beginning. This is a way for us to get into cash flow, being a producer, and whoever we do further offtakes with, that's all open and is still on the table.
Okay, but you got the export permit for lithium chloride, basically.
We had the understanding with the Catamarca government. We are finalizing those permits. We're not far away from getting them. We have good discussions with them in terms of all the fine-tuned details that is in there. So we don't see any problem coming from that end. And we don't see also any problem from phase 2 permit, because we already ticked the boxes on the checks that they needed to do in terms of the technical stuff. So the next one is a public consultation, and once the public consultation gets over the line, then the permit should be granted. So within the second half of the year, we should get the permits for phase 2, and before that, the permits for the commercialization of our concentrate.
Okay, but in terms of, do you plan to fund stage 2 from cash flow from stage 1?
Part of that is going to be paid by phase 1, although the capex won't be 100% payable from phase 1. There'll be further capex to be payable through
How much is the
third party.
capex for phase 1?
Capex for phase 1 under the study was around $110 million US.
And how much lithium chloride will that produce?
5,400 tons of lithium carbonate equivalent per year.
Okay, so if you got an offtake for 5 years, 10 years from a Chinese group, they gave you $120 million, you'd be selling them 5,400 if you gave it all to one customer, and you're speculating or you're suggesting that they may give you 70% of the battery grade carbonate price.
Correct.
Okay, so if that's 15,000 or whatever, 14,000, 70% of that, so call it, you get $10,000 a ton times
and we can get a margin.
That's $54 million a year. So that would be, if they gave you a full $100 million, a 2-year payback on that. How far after stage 1 would stage 2 come online?
We believe that it depends on the market's conditions, but we don't necessarily have to go all the way to phase 2. We can go from phase 1 to phase 1.5 before getting to phase 2. Because remember, we are building ponds, and all of this is modular. So we don't need to come out with the whole capex for phase 2. We can come with somewhere around half in order to grow and continue to get offtakes, get funding, and continue to grow. We have a long road to go. We don't expect to do all this at once. We understand that market conditions are difficult, but we also seen a very strong interest from the companies that are embedded in the battery development to commit to contracts, commit to funding, commit to developing in brines, because they see that brines are the ones that can survive in any environment.
Mm-hmm. You just hired a CFO.
Yes.
Can you tell us about him?
Ross. Look, it's been we headhunting him. He's been a guy that's been working internationally before. He's from Perth. He got the experience that we need. He's going to be a crucial part on the funding side of things, especially looking at phase 1.5 or phase 2, because we need further strength into the team. We want to grow, and we want to be able to get the best deal that we can get for Galan in order to fund the subsequent phases. Because if you look at where Galan it is and where we want to be, we definitely need to have a bigger, stronger team. So Ross has been a pivotal part of this, where his experience is all on the credit side of things. So we do have already a good finance team, but we need that part of the funding side where it is, and equity not so much, because that's what we've done, but on the debt side of things, he's has the right relevant experience for Galan then to get the next leg of funding that we need.
Okay, and you just raised money at what price and how much, and how long does that get you? Because there has been, people are tagging me on X and other places, just, you went full throttle, you spent a lot of money to get the brine inventory. I think you told me in November that was like really important to prove the concept, but there is some, you've had to take dilution at a low price as a result of running out of capital.
Yep, it's all about going and take the project forward, yes. We raise Australian dollars 13.5 of 23 cents. And the previous raise, the board managed to participate. On myself, I put $1 million on the previous raise at 46 cents. The current raise, I'm going to participate myself at $500,000. I fully believe in the project and where we can go, so I put my money where it needs to go.
That's very nice. I mean, you share price halved from 43 cents, and you're putting, you're averaging down further. So that is a good insider buying is something that you were not seeing that much of. Actually, one of our prior interviews, Atlantic Lithium, they're a bit of an outlier, in that we're not seeing. I don't think we've seen Arcadium or Albemarle management on the tape. It's rare. So I mean, that's a good validation for any of your minority shareholders who are questioning that.
Yeah, and I'm going all the way with Galan, and I see solutions. Yes, we are not where we want to be, but I can see solutions. And the interest, as mentioned, the evolvement of interest that we're facing because we have a product that we can sell. We have, in other words, the best concentrate in the world. If this was hard rock, it will be SC 12.9%, and you don't find that anywhere else. And the impurities level that we have, it's it gets converted very, very interested. So, the message that I want to pass is that we understand the situation. Yes, there are things that could have been done better. We take those learnings. We improve in the team. We strengthen our position as it is. Financially, yes, we are in a position that we don't necessarily want to be, but commercially, we're in the strongest position that we've ever been. So,
well, look, you have Daniel on board, and he, through his SQM days, is very well plugged into the Chinese and Asian market. So China is advanced in so many ways. They're active in Argentina. So, it's they're nimble, and they take advantage of the low price environment. So we'll see what happens with Glencore, but it looks like you have alternative options here in China.
Yeah, there are alternative options in China, and they're quite more than what we're expecting to find. We would love to place our concentrate in North America or Europe, but there is no one is there to convert that.
Right. As is so, much of the case across the supply chain, China's just been doing this, for 10, 20 years ahead. Anyway, great seeing you, JP. I'm glad we opportunistically saw you around here and had extra time so that we can take this time and appreciate it.
No, thanks, Howard.
Okay. Take care.
So.